Hey, Matt Ramuzzi here from CapForge, and I wanted to talk to you a little bit about our due diligence service. We've done over 400 due diligence projects just in the last few years. And what we do is go through the business that you're considering buying and look at it in two phases. Phase one is we look at all the historical information. We're looking at the tax returns, the bank statements, the financial statements, the payroll reports, and anything else we can get our hands on to verify the historical information that they're presenting to you and using as the basis of their valuation. We're looking at the income, we're looking at the expenses, we're looking at the profits. We're looking at everything that they're claiming as add backs to verify that they make sense and that the amounts that they're telling you are the real amounts, right? And then we're comparing that, what we find, with what they're saying. And if everything matches, great. At least we have peace of mind to know that the numbers we're basing the valuation on are accurate. But very often what we find is there's some discrepancy. Sometimes it's big, sometimes it's small. What we want to understand is this material, what's causing it, do we understand it, can we find documentation and backup for it, or what do we think the real number is? So if they're claiming $1 million in SDE and we can find $1 million, great. Sometimes we find 1.2. Sometimes we only find 700,000. But that's all part of the first phase of the due diligence, is to understand exactly what historically we believe this business actually did in terms of performance and results. Step two of the due diligence project, or phase two, is figuring out everything else about the business, right? First of all, even if the historical information was totally accurate, is that something that a new owner is going to be able to get? There's lots of cases where the historical information is completely accurate and exactly what the current owner has gotten, but for various reasons, the new owner isn't going to be able to get the same amount. And that's something we want to understand. If the current owner makes $1 million a year, but for various reasons, a new owner is only going to be able to pull $700,000 out of it, because of maybe unexpected expenses or underpayments or low payroll that's going to have to come up. There's lots of reasons. You want to know that, right? You don't want to count on getting $1 million and really find out after the fact you're only going to be able to pull $700,000 out. Also in part two, we're looking at comps for similar businesses. How much are they selling for? How does that valuation compare with what the deal you're looking at is valued? We're looking at risks. Are there any red flags or other reasons to not get into this business? Are there opportunities? Are there things the current owner isn't doing that you might be able to do as the new owner that would make this business even more valuable to you? And then we're also looking at working capital, right? How much are you going to need to bring to the table to be able to continue to operate this business with enough of a cushion to survive any seasonality or ups or downs or unexpected expenses? So we're looking at all those things and putting it together in a report for you so that you can proceed with peace of mind if the deal looks good. Or if you need to renegotiate, the deal looks good, but only if you can get it for a certain amount under what the current LOI says, then you know what that is and why we think that. Or once in a while, a deal is just better off left alone. It's better to walk away and find something that's going to work for you than to proceed with the deal as is, or even at a lower negotiated price if it's still going to just be too problematic. I really treat every deal as if I was going to buy it. And I always ask myself, what would I be worried about? What would I be excited about? What do I think the risks are? And do I think the price is reflective of the risk? And if not, what price would I be comfortable at that I think would reflect the risk against the opportunity to buy this business? And I know where you're coming from because I have personally sat down and bought a business, signed on the dotted line, given a personal guarantee for an amount of money that I never could have paid back if the business didn't work out. And I was able to grow that business and then sell it 4 years later. But I know exactly how you feel sitting there thinking about this, the pros and cons, the excitement of thinking about getting into owning a business yourself and being the master of your own fate, but also the nerves and fear that if this doesn't work out, not only am I going to be on the hook for a lot of money I probably can't pay back out of personal funds, but also just the embarrassment and the disappointment of feeling like I went into this thinking I could pull it off and then it didn't work out. So we definitely take all of that into consideration. I take all of that into consideration when we do your due diligence project and go through the whole review of the business you're looking at buying and try to uncover everything that could be wrong with it, that could be a problem, that could be a risk, so that once we know exactly what we're dealing with, you can make a good informed decision about whether or not you want to proceed, or if you want to renegotiate, or you want to walk away. And those are all parts of the process that we go through. In terms of the actual time, what we aim for is 2 weeks. And that 2-week turnaround time starts when we have all or nearly all of the information that we're looking for in order to evaluate the business. We don't need every last item, but we need the bulk of the items, and we'll give you that list when we have a conversation about the business and we learn the specifics of the business. And as far as the price, it really depends on the complexity of the business. Smaller, simpler businesses cost less to investigate, and so therefore the price is less. Bigger businesses, more moving parts, maybe there's a couple related entities, there's transfer pricing, there's a complicated partnership ownership structure, who knows? Those things can all add to the price of it. But whatever the price is, we will quote you upfront as a fixed flat fee. It's half down, half on completion. And if it's for some reason turns out to be more work than I thought it was going to be, that doesn't change the price for you. That's on me for quoting it not as well as I could have. But after having done so many of these, we usually get it down pretty well. The price range, I would say, generally goes from around $3,000 to as much as $10,000 or $12,000, but the average is in the $5,000 to $7,000 range for businesses generally selling somewhere between $250,000 and $5 million. That's sort of the general price range that most of our deals fall into. We've done smaller, we've done larger, but most of them fall into somewhere in that range. So if you're interested in having a discussion and finding out more, please send us an email at info@capforge.com, or go on the website, fill out the contact form, or even give us a call at the phone number on our website, and you can tell them you saw the video, you're interested in a due diligence project, and you want to have a conversation about it, and we'll hop on the call and chat. So hopefully this information is helpful and gives you an idea of what we look at, how our process works, the timing, the pricing, and what we're trying to do ultimately, which is give you the peace of mind to feel good about the deal if that's the decision that we reach, or the peace of mind to know that walking away from the deal was the right decision, or knowing that there is a right price for the business, but it's not the price in the LOI, it's something different. And that's what we want you to take away from it. Unlike a lot of other firms where they'll give you a whole bunch of facts but tell you draw your own conclusions, I will tell you, here's what I think about this business. I think you should buy it, or I think you shouldn't buy it, or I think you should buy it but only if you can get it for this price or less. I want to leave you with some actionable information and a real opinion so that you can make a good informed decision and know exactly what you paid for when you hired us to do the due diligence. So again, hopefully that's helpful, but feel free to reach out and connect so we can chat about it more in detail.